We're just 2% away from the all-time highs on the market. If you've been following my weekly analysis, you'll know that we've been expecting this ever since we started seeing this potential bottoming pattern through several indicators that I've shared throughout my recent videos. We were, at least I was, my bias was that there would be a 65 to 75% chance that the market bottomed here, and I was forming this bias around here, um, really middle of April. Um, and since then, that bias has grown more and more towards hitting all-time highs and this being the market bottom. Um, so why do I make these weekly videos? Because you might watch them and be like, well, he's just looking at SPY and analyzing where the market could go. And that's precisely what it is. I mean, to analyze SPY is to analyze all stocks almost, right? Because most stocks are going to follow the market index because the market index is the average of all the stocks. So if you form a buy, if you put the odds on your side that you're saying that looks like the odds are we're going to continue moving higher, when that helps you form better trades because you'll be on the right side of the trade. You'll be going long on stocks. If you're swing trading, you'll be going long on those swing trades. You'll be selling more aggressive cash secured puts. You'll be selling more out the money and safer covered calls, expecting price to continue booming higher, right? This is how you prevent FOMO. This is how you prevent taking trades on the wrong side. You should not have been shorting at all after this day on April 19th. Really, your bias, if you were shorting, you lost money, most likely, unless you were day trading. Um, because because all the technicals on the daily chart and SPY are pointing to the stocks moving higher over time. Um, and how does it help you for investing? Well, if you know that this could be the market bottom, you'd be using the cash reserves that you have here. Let's just say you're like me and you were like, I think there's a 30% chance we're going to enter a bear market and go lower than the April lows, and then 70% chance that we're going to hit all-time highs. And if you have 50% cash, you said, okay, I'm going to reflect that in my cash position. I'm going to use half of that cash reserves, 15% cash in my portfolio, to add to my long-term investments here and save 15% cash. As more technical levels were broken and the move was looking to continue rallying to all-time highs, okay, I'll use another 5% cash here. I'll use another 5% cash here until you have, whatever cash reserves you're comfortable with. That is a point of these videos I try to make every week. It's just to ground you. It's to say, hey, this is what happened this past week based on what's happening, based on what the price action is showing, aka what the institutions are doing. This is how you should be planning your trades and your investing moving forward. This is what I do for myself every week. I don't edit my videos. All I do is just I click record and I just think out loud, you know. So, so anyways, having said that, I hope you gain value from these. I hope these help you like trade better, plan your investments better, plan your trading better. I hope it helps you learn technical analysis, learn how to read charts, and learn how to not predict what the market will do, but at least have an idea of the probabilities. There's a 20% chance the market will do this, and a 10% chance of this, and a 70% chance of this. Because of the 70% chance of the market moving higher, I'm going to manage my risk accordingly. Anyways, so let's see. So I'll start off with AVWAP-Q like I do with every single video. AVWAP-Q is VWAP anchor at the beginning of each quarter, used specifically on the market indexes. I use them on SPY. It's very easy. It's this white line here. When price is trading above the white line, you should be short term. You should be bullish in the short term. And that's been the case basically on April 9th with this little false breakdown and recovery the next day. and boom. Since then, all your trades here from April 23rd until now should have been biased to the upside. Um, and we continue to be trading above it and largely above it, about 7% above AVWAP-Q. Keep in mind that the new quarter will be July 1st. So in a month, this line will be replotted. And when it's replotted, it takes like a week or so, maybe 5 trading days, for the line to form again to be able to be used. So in that time, like first week of July, luckily it's a holiday week with 4th of July. Won't be able to really utilize that indicator, but we have other methods of determining trend, like the moving averages. So let me turn on the 50 and the 150, because the 50 and the 150 simple moving averages on the daily chart helps you determine long-term trends, right? Because very simply, when the 50, which is the blue, crosses below the 150, which is the green, and they both slope down 10 degrees or more, like we have here in May of 2022, that signals a long-term downtrend. All right, it's very important that not just the crossover, because there are instances where the moving averages will cross over, and we don't enter an extended bear market after that point. So the degree and direction of the slope matters. Both of them have to be sloped down 10 degrees or more. On TradingView, you can measure the degree. I believe if you go to trend lines, you go to trend angle, you can plot that degree, and you see over here it says 5.9%. And then the vice versa. When the moving averages flip, cross back above 50, above 150, they're both sloping up 10 degrees or more, that signals a bull market, long-term uptrend, and that's exactly what we've seen this whole time. So looking here, we had the crossover back in beginning of April, but the 150-day never angled down more than 10 degrees, about 4 degrees over here. So therefore, we never officially entered a long-term downtrend. On top of that, if I plot the 200-day moving average, we closed above the 200-day moving average for 5 trading days, fell back to test it, and bounced off it. Very, very, very bullish, very constructive. So we have AVWAP-Q showing bullish bias. We have the moving averages showing bullish bias. What else? Now we have these technical levels over here. So in a trend reversal pattern, like I mentioned in my previous videos, which I won't go too in depth here because I'm trying to make my videos a bit shorter, you have wave patterns in the trend, up, down, lower highs, lower lows. When you start breaking that, making a higher high and a higher low, that forms a trend reversal pattern. Okay, so knowing that, this high right here becomes very important. We want to see the market make a higher high, which we did. We broke above this 576 level, 576, and we formed a new high. We tested it, formed a higher low, and now we're, bam, breaking above this level and making another new high, right? So if I draw this out, and take it aside, that is a trend reversal. Higher lows and higher highs so far. So the next high we had to break is all-time highs. It's just 2% away. And I don't put too much weight on these diagonal trend lines, but they can be helpful to spot just like potential resistance levels. And so I did draw one final resistance line connecting this high that we had here, and we broke it this week, and we back tested it and held it on that chaotic and hilarious day between Elon Musk and Trump, the little feud. So despite that chaos with Tesla dropping, the market held that and we gapped up the next day. Again, very bullish. All signs are bullish, all signs leading to all-time highs, despite the economic news, which is why you have to trade what you see, not what you think. I did not come up with that. That is taken from Pete on One Option, but I agree with him. The news in the past, especially during COVID, allowed me to miss out on a lot of this rally over here because down here people were saying, well, if you look at the economy, I mean, the businesses are shut down. We're out of supplies. People are not working. Yeah, all those things like tell you, damn, like we're gonna see a recession. But we didn't see one. Like, I mean, we did see a brief recession, but look at the market. Market recovered in a V shape all the way to all-time highs and beyond. And then when the market hits all-time highs, that's when the good news comes out. Oh, government stepping in, stimulus, unemployment, payments, blah blah, rent, delays, all that stuff. So the news are important. It's good to stay aware of what's going on, and so that way, not so you know what the market's going to do, just so you know your risk, right? When you're investing in here, you're saying, I know right now, even though we're near all-time highs, there's a risk of those tariffs being enacted from the Independence Day. There is a risk of inflation not being transitory with these 10% tariffs we've been enacting. There's a risk of more trade wars coming. Like there are these risks, you know. That's what the news should be used for. So, what I think we're going to see all-time highs very, very soon. On the fundamental side, we had um, okay readings, I guess you could say. ISM manufacturing PMI and ISM services PMI. Those are basically for numbers that show whether these industries are contracting or expanding, which a reading below 50 shows that it's contracting. So manufacturing is still contracting, coming in below forecasted at 48.5. And then ISM services it's basically 50, which is like neutral, not expanding nor contracting. It's just kind of wavering there, but it's decreasing. The point is that it was 51.6 and now it's down to 50, which means the next reading could be below 50, which means it's, contracting. So these two are signaling that the economy is still slowing down, basically. But job openings came out more than forecasted and more than prior. So more job openings. Non-farm payrolls higher, slightly higher than expected, and unemployment rate held steady at 4.2%. So this economic slowdown we're seeing, it might not be because people are losing their jobs. More is because of increased prices, right, from these tariffs. So fundamentally, we still have those risks from the Trump administration, but as long as unemployment rate and the labor market hold steady, the chances of recession will be very, very low. Um, like we saw in 2022. I mean, I was expecting a recession. A lot of people were expecting recessions, and we didn't get one. And that's because the labor market held up. So you might be thinking to yourself, well, dang, like the market's all-time highs. I thought we were going to head lower. I wasn't buying stocks. I missed the boat. What do I do? And I'm here to tell you that there are still some good deals out there in the market. Just because the index is up, I said most stocks follow it, but some, usually for fundamental reasons or just plain technical reasons, um, will not follow it. They say that in the short term, the stock market's a voting machine, and in the long term, it's a weighing machine. So we want to take advantage of that discrepancy between short term and long term thesis, right? And so I want to offer my free Discord community called Market Victor. It is free. It probably will not stay that way, forever, but for now it's free because I want to help as much people as possible and I want to build a community. And in this, I offer the valuation database where I track 30 to 40 stocks that meet my investment criteria, which basically means very strong balance sheets. Very usually it means low debt. Um, but some of the more mature big companies like Walmart, for example, just naturally have more debt to expand, but they make it up through their other like economic moats, brand recognition, um, competitive pricing and things like that. Um, so what I can do here for you is I can go and look at stocks that are undervalued. And here's a list of stocks that are still undervalued, even though the market's near all-time highs. And personally, I think Salesforce is a great stock to look into. I'm not a financial advisor, so you should do your own research, but my analysis will help you narrow down your search. Instead of looking through like 500 stocks and what to buy, you click on this one tag and now you see, okay, now my list has dropped down to 7, and I'll open this, and then you'll be able to see my analysis in here and be like, okay, this is why it's undervalued. Fair valuation of 282 with a grade A. 3 out of 3 fundamentals rating, 3 ratios I track, PEGI ratio below 1. Like, wow, okay. And stock is in the Dow Jones Index too. And there are software companies that they have low impact from tariffs. Like, this could be a really solid investment. If I don't have it in my portfolio, it's undervalued, I will consider it. So this is kind of what the database could be used for investing. So I recommend just check it out. Um, see what kind of stocks are undervalued. You can see which ones are fair valued. You can filter them by, 3 out of 3 fundamentals rating. You can filter it by a lot of different things like PEG ratio less than 1. Um, so yeah, I highly recommend to check it out for really helpful for investing. I'm also a trader. I sell options, and so I do also share all my trades live in my Discord. I have a channel called Live Trades. I share every single trade I do live. Every week I post a trade summary. This past week, yeah, so I tracked my 2025 win rate, which is 51 out of 54 trades for 94% win rate. Every week I show my active trades and my closed trades for the week. I summarize it. Uh, I answer a lot of questions about why I take certain trades, why I selected the strikes I did. Um, so yeah, again, this is a community for learning. If you want to learn how to trade and invest better, become profitable, build a good portfolio that will match or outperform the index, I recommend you give this community a shot. Having said that, good luck next week and thanks for watching.